Good evening and welcome to this session of live coaching classes of the Board of Studies of Institute of Chartered Accountants of India. It's a pleasure to be back with the live coaching classes and addressing all of you. I see a lot of people have wished on the query pad. So we have quite a lot of people, so I don't want to waste time reading out. So I greet you all well. And as you keep asking questions or, giving some views, I'll definitely mention your name, etc. So, very good. Today, we are going to begin our journey. I'm going to use the word journey. We are going to begin our journey into the knowledge base called Companies Act or corporate laws, the law relating to companies. Right. So we have Mr. Shankaran greeting me from Nellore. I think he's a repeater because I've seen a similar greeting before. Wonderful. So nice. So many of you. I'm so happy. And I also can see from the extensions of your student identification number that you are distributed across regions. I'm so happy. So northern, southern, western, eastern, and central. All are there. Beautiful. So today we are going to see some preliminary definitions. Means we are going to see some introductions and certain important definitions. What I have done, as usual, I have not followed the Institute Board of Studies format. That's because it's in the section order. Whereas what I have done, I have tried to sort of collect ideas into common baskets. So, for example, types of companies, I have put them in one basket. Though they may come in different places, I have put them in one basket. So it's like holding company, and then I've given subsidiary, as a subsidiary and then holding. So the idea is you will get in one place all that, rather than several. Also, certain definitions I have not covered here. You will be very surprised. You will say, sir, definition is there. Why are you not covering? Not because definitely it will be either covered by me later in some other topic where it is relevant, or it will be covered by some other faculty. But most of the definitions, by the time we complete share capital and debentures, inshallah, I would have completed it for you. I would have given you the definition. I would have used the definition, etc. So don't worry about it. If a few definitions are not here, don't worry. Okay. If they are there, okay. If they are not there, also don't get worried. I will cover it. But some definitions are important because types of companies we are not going to cover again anywhere. What you cover here is all. Later on, we will get directly into incorporation. Okay. So here, types of companies, this will be the time when you will get it covered. Okay. So, I'm so sorry to hear that, Mr. Shankaran. You'd open, my God, I'm very thankful to, the Lord for giving this opportunity. No problem. So what? You could not appear in 23? No problem. You can appear in December 23, and I'm sure you will get through with all your, energy. That in spite of all this, you are still enthusiastically pursuing the CA course. So let me at the outset wish you well and look forward to receiving news of your academic success. Great, Mr. Shankaran. I'm inspired by your efforts and great. So, as I told you, we are starting the Companies Act 2013. Now, my dear friends, you are quite familiar because some of you would have studied this in BCom, or some of you would have studied at least a portion of it in foundation. Small portion, like for example, the doctrines and Solomon versus Solomon, separate legal entity, whatever, something. So it's not as if you're totally ignorant, and you're aware that the Companies Act 2013 is the successor. It replaced, okay, it is coming instead of the Companies Act 1956. I began my teaching career as a teacher of company law for the professional bodies, ACS and CA. I was a teacher. That time, 1956 law, I was very happy. No, I used to love teaching. I love teaching company law. Believe me when I say that. Company law is a beautiful subject. I like it because I like it. And obviously, it's a beautiful subject because I like it. Okay, Don't think. Some of you might find it boring, but I believe me, it is not boring. Once you understand the logic, once you understand why this is so, then nothing is boring. It's only when you study without understanding why, and all, then the basic, the principle, then it becomes a little boring. Mug up and vomit types. No. Understand the subject, you easily remember the details. Not a problem. This is what my guru, Professor K.S. Anantaraman, says. Now, the Companies Act 2013, for every chapter, there is a corresponding set of rules. So you'll have set of rules. So here also you have the company's specification of definitions details, short form SDD. The company's SDD, specification of definitions details rules 2014. The main law will give certain provisions. The rules will tell how. To repeat, the main law, the Act, the Companies Act, the Act of Parliament, which was enacted in Parliament, will tell you what to do. The rules, which are not enacted in Parliament, the rules are not passed in Parliament. The rules are called delegated legislation. The rules are framed by the central government. In this case, the appropriate central government ministry is the Ministry of Corporate Affairs. So the Companies Act 2013 is governed, is implemented by the Ministry of Corporate Affairs, MCA. So we'll be hearing a lot about this Ministry of Corporate Affairs during our lecture. So I thought I will introduce you to this body, the Ministry of Corporate Affairs, with obviously the Minister for Corporate Affairs, no less than the Finance Minister, our own, Mrs. Nirmala Sitharaman, is also the Minister for Corporate Affairs. Okay, so it is governed by them. The rules are formed by the central government. Now, the rule-making powers are restricted to telling you how. What is always given in the Act, what cannot be controlled by central government. But once the Parliament says what, how, so which form to apply, etc., or what is the time limit also you can tell here. Sometimes it will be told in the Act. Similarly, if there are any limits, they may delegate the power to prescribe the limit to the central government. And the central government in exercise will be able to complete it. Ms. Kiran Shukla is asking a question. Don't mistake me for laughing. We have still not started. I am not God. I cannot predict anything. Okay, but I can assure you, to answer your question, in how many days? Timetable is there, na? I think timetable is given by the institute. For the timetable will proceed. How many ever days it's there? It is there. I have not counted the number of days. I think it goes on till September. And how much time we will take to revise? I won't be doing any revision. If any revision is to be done, that you will do on your own. Maybe you can download this video and go through it again. Okay? No revision. One time teaching itself is so difficult. If you have to do revision also, it's not going to happen. What I will do, if it is a little tough or if it is a little difficult, I will repeat it or think. Okay? And will we be able to do this before the exam in November? Inshallah, yes. That is our goal. By September, we will finish it. After that, we'll have. Okay, Kiranji, I will tell you. Don't worry. Aram se, suniye. That's all. Listen to me. Try to understand the topic as I am teaching. That itself is enough. An intelligent student, once listening, will be able to remember. That one thing. Otherwise, what? Anyway, my classes are coming one day later. Before we do that, you go through my whole thing, maybe go through the video, etc. Okay. But before we proceed, because Kiran Shukla is asking this type of administrative questions, which have nothing to do with the topic, but are connected with the administration of the class, I'm going to make certain points very clear to you. A. When I am teaching something, listen to me carefully. If you do not understand, please raise a query in the query pad immediately. I will answer it. But please do not keep quiet. And then after I've completed, say 10 slides, don't say, please repeat the entire 10 slides again. It is not possible. For example, there might be a situation where I might be teaching a definition with many subsections. So as I'm teaching each subsection, if you have a doubt, please ask then and there. After I completed, say, 7 subsections, then don't say, sir, please repeat the whole thing again. Sorry, this mode of teaching, this format, it will not be possible. Even in a regular classroom, it is not possible. With, say, 100 students sitting in the hall, one student cannot say, repeat it because I have not understood. That student, what he or she should do, Aram say, go through it later. And specific doubts, please ask. Specific doubts, please ask. 1. 2. These slides, these PowerPoint presentations that I'm using will be uploaded in our Board of Studies portal, but not today. Once I complete the topic, for example, once I complete the topic preliminary, maybe that will be day after tomorrow, inshallah, then definitely I will upload it. Iske baad only I will do it. So not now. I hope these ground rules make it very clear, don't raise. Okay, so this is 2 things I would like to make. Otherwise, feel free to ask me any number of questions. I will answer. But I will try to make the topic as simple as possible. Thirdly, language could be an issue in the sense I am not fluent in, I don't know Hindi. I cannot speak in Hindi. This, according to the Institute appointment letter, the language of communication should be only English. So I'm trying to use Asan English. I'm trying to use simple English, Asan, which could be understood by anybody who has something like higher secondary education can understand. Where word is difficult to understand, I will explain it. If you still don't understand, don't worry. Just put that word there and say, what is the meaning? I will give further Asan explanations. Easier explanation for that word. Don't worry. I do appreciate. See, some of you might be fluent in Hindi, but not in English. Some could be fluent in Telugu, but not in English. Some in Tamil, but not in English. And so on. With a country with 24 or 25 different languages, it's quite possible for us. But we will use English, but as Asan, English, which is easy to understand only, but Hindi, very difficult. So if you are expecting in Hindi, maybe you're going to be a little disappointed. So don't be disappointed. I will use simple English, which would be useful to you also, because in the long run, somewhere you will have to pick up English. Okay. Similarly, if you want to ask a question and you want to type it in Hindi, do it in English Hindi. That is, type out in English. I can understand a little bit Hindi, but if you type it out in Hindi, Devanagari script, I may find it difficult to read. I can read Devanagari. I'm fluent in Sanskrit. I can read Sanskrit, but I cannot understand Hindi. And that too in Devanagari, it's a little difficult to read. So put it in Hindi, in English. Transliterate it in English. Chances are I will understand your question and I will answer. Don't worry. Language need not be a barrier, but be careful. See, these are all ground rules. Kiran Shukla ji, don't be apprehensive and nervous. Most of the time, highly intelligent students do not find it difficult to clear the exam, not because they have not studied well, but because they are nervous, because they are apprehensive, because they have exam fear. After spending 3 months of hard work preparing, they go to the exam hall, become tensed and gone. So even if you don't study anything, don't become tensed. Ram Sekar. There's no need. If you worry, nothing is going to happen because of that. If you don't worry, things will go well. Have this thought in your mind, and let us, with these words of submission by the teacher to the student, let us now jump into the topic as such. The Companies Act. I will answer. What is that? Darshan ka question later. That's a basic question. I don't want to give straight away. If you can remember, you can. Otherwise, don't. If you don't remember section number, it is okay. But content of the section, you should know. Okay. And there are some important sections. When I come to that, I will myself tell you, hey, this is important. Try to remember. But you need not remember every section. If you can, good. If you cannot, no problem. Not knowing or writing section number is not a problem. Okay. But if you can remember, good. But if you don't remember, no problem. The Companies Act is a mammoth legislation. Mammoth means huge, big, bada. The Companies Act is a mammoth, bada legislation containing 470 sections. Earlier, we had 730 sections. Now it's reduced. Reduced size is 470 sections. The reduced size is 470. Earlier you had something like 16 schedules. Now only 7 schedules. Okay. So definitely Companies Act 2013 coming down, but still heavy. However, the basic principles are very few. Once the basic concepts are understood, then the details are easy to learn. Details are easy to remember. In the lectures, I'm using the exact verbatim, I'm repeating it from my guru's book, Lectures on Company Law by Professor K. Anantharaman. In the lectures that follow, the material is so arranged as to enable you to remember the details with ease. So my slides are created keeping in mind your last minute revision. For example, you have only 3 more days for the exam, or last exam over, day after tomorrow, Companies Act. You have only 1.5 days to revise. If you go through all the slides of mine for the topics, then it will be easier. Okay. Yeah. Will you teach whole corporate laws? No. This will be shared away with another faculty. No problem. We'll get it. Don't worry. The entire corporate law will be covered in the Board of Studies classes. Don't worry about it. I may not take the entire thing, but I'll take a substantial portion. Don't worry. For which you will be able to, I don't know what framework she is asking that question. Sir, will you take whole company law, sir? Should I suffer like that? No. Right. Some other faculty also will take. Okay. Chalo. Now here comes a very important conceptual model. This is not in your Institute Board of Studies material, but it is important for you to understand the conceptual model framework of the company law. Basically, there are 2 purposes, 2 pillars: protection of investor, protection of creditor. So the law is meant to protect people who are investing money in companies. Potential investors are also covered. Please understand, we are not only talking about people who have invested in shares, who have become shareholders. No, we are talking about potential. That is, people who will be induced or encouraged or attracted to invest in that company. Those people are also called investor. They are also covered. That is why we are using the word investor protection. I'm not using the word shareholder protection. The word investor is wide enough to include shareholder also, who is already a member of the company. A man who is going to become a member, he reads the prospectus, he is giving information about the company. He wants to become a member of the company now. Such person also we are protecting. In prospectus, we will see that. How we protect the investor. Other chapters, every section or group of sections when we study, please think, is there a protection of investor here, or is there a protection of creditor? If so, how are they being protected? If so, how is the protection happening? Once you go there, the basic principle now, then you will understand easily the provisions. So something should be done, something should not be done, something should be done within 30 days, all that will come. Or else it can be protection of the creditors, people who have lent money to the company. Creditors are of 2 types, you know that, secured creditors, unsecured creditors. Financial institutions, banks. So whatever it is, our goal is to protect the creditors. Also, you have one major group of creditors, okay, loan creditors, who are called depositors. They will also be protected. How? Each chapter will tell you. For example, when we come to chapter on acceptance of deposits, we will talk about protection of depositors. Registration of charges. We will talk about protection of the creditor. Anywhere you keep these 2 things in your mind, protection of investor, protection of creditor. Plus, recently, the word public interest is also added. Meaning, a company's activities may have an impact upon the national economy in terms of environment, in terms of employment opportunities, in terms, so on, a consumer, so on and so forth. So, public interest is also involved. But who will decide whether the company is acting according to public interest or not? Who will decide? Not you and I. We have elected the government now. That government, elected government, they have appointed the ministers and all. They have appointed the minister, those ministers, etc. They have selected the IAS officers. That machinery is called government or central government. That's central government, the executive mechanism, okay, the various ministries, they will decide whether this is in the form, it is according to public interest or not. That they will, based on some complaints, etc., they will decide. So you and if you think a company is acting against the public interest, you have to go and complain to the central government. Then they will decide whether it is against the public interest, in which case they have certain powers to protect the public interest. Okay. So it's quite an interesting topic. Remember, one more thing. All of you, once you complete your chartered accounting course, you are going to become employee of a company. You will be, your employer will be a company. Invariably, yes, all of you want to join corporate, right? None of you want to work in a proprietorship concern or in a partnership. You all want to work in large listed companies, corporates, corporate culture. So if so, your employer will be a company. Remember, therefore, you should know the law relating to companies and understand it. Also, some of you may want to practice. And when you're practicing, you will have to audit companies. It's called company audit, which is why if you are thorough in this part, the auditors, accounts and all in this syllabus, then auditing syllabus will be easy because some portion of auditing syllabus will be covered here. Or if you studied it in auditing, it will be easy here. There will be overlaps. Intelligent students will see where the overlaps are there and they will comparatively study the subject so that they will know, well, I have studied there, so here I leave. Or I have studied here, I will leave it there like that. Same knowledge, you will not mug it up twice. What's here, it's there. Okay. So like that, you have to do a little comparison. Company audit, because company audit is complicated. Yeah. You should not only do that, or you will want to do. Yeah, some of you might want to make startup companies. You want to make your own company. Then that is also there. So there are so many ways in which you are going to come in touch with companies. In which case, you should be familiar with the law relating to companies. As I told you, the Companies Act 2013 succeeds the Companies Act 1956. Thanks to bringing Jammu and Kashmir into the Indian subcontinent and making it part and parcel of our country, the law now extends to the whole of India. Okay, and various sections have been notified on various dates. This created a lot of problem, but all that is now blown over. So a lot of issues are there. They will announce a section only later and all. I'll come to that a little bit later. I'll explain what do you mean by notification and all that. Applicability. The provisions of the Companies Act applies to companies incorporated under this Act or under any previous company law. Meaning, this law is applicable not only to companies incorporated under the Act, this Act, but also under the 1956 Act. Before the 1956, there was a law. 1920 law was there. That law, all companies are included. Then you have insurance companies, which come under the IRDA. Basically, they are also company incorporated. Some of them, what happened? We had something called public sector undertakings. Now, these public sector undertakings were not incorporated as companies. Many of them were created by an act of parliament. For example, Life Insurance Corporation, United India Insurance Corporation. So they were basically corporations. And so that particular organizational structure, once they wanted to go for public listing and selling their shares to the public by allotting, they converted themselves into companies under the Companies Act, insurance companies. Life Insurance Corporation became LIC Limited, Life Insurance Corporation Limited. Indian Oil Corporation became Indian Oil Corporation Limited, IOCL. Then banking companies. Companies engaged in the generation or supply of electricity. Companies governed by any special law, whatever. Okay. For example, telecom companies are governed by the Telecom Act. That is the telecommunication TRAI. Okay. It comes under the Telecommunication Regulation Authority of India. So that's governed by a special law. But still it is a company coming under the company. So both the laws will apply to it. This is especially so when you come to, that is especially so when you talk about telecom companies and all that, they have their own special law. You have to apply that law. Darshanji, I'm very happy that you are studying from 139 in auditing subject. Let us hope that you will remember that and all that. SBI is a peculiar case. State Bank of India, I don't know how many, it's an old history. State Bank of India was not formed after independence. State Bank of India was existing at the time of independence, but it was not called State Bank of India. It was called the Imperial Bank of India. Imperial Bank of India. It was a British operated bank, Imperial Bank of India. That Imperial Bank of India became State Bank of India. With bank nationalization, it became owned. Imperial Bank. Yeah, SBI has its own act, SBI Act. By the formation of the State Bank of India Act, the business of the Imperial Bank was taken over by the State Bank of India. Okay. And see, along with the State Bank of India, you have its subsidiary banks. Now they have all merged into SBI. But a short while ago, about say 7 years ago, you had State Bank of Mysore, State Bank of Hyderabad, State Bank of Travancore, like that. State Bank of Patiala. Am I correct? So these banks, you know what they were? When the British were running the Imperial Bank of India, the various princely states were there. Gwalior, Mysore, Hyderabad, Golconda Nawab was there. They had their own banks. Those banks, the banks of the princely states now, they became the respective state banks, subsidiaries. State Bank of Patiala, State Bank of Mysore, State Bank of Hyderabad, State Bank of Travancore. Like that, 6 banks are there. State Bank of, I think, Bikaner and Jaipur. Yeah, there. So these banks, they became the subsidiaries of State Bank. Together, they come under the State Bank of India Act, governed by that act. But then, when SBI went for public listing, now when NSE came, SBI got itself listed. At the time of listing, with the disinvestment and all post 91, SBI converted itself under the act. It became SBI Limited, State Bank of India Limited. It continues to be a banking company governed under the Banking Regulation Act also. So, most companies have their specific acts and all that. So, just have to go in. If in case you're going to deal with that company, please find out if it has its own act. Once they became companies under the Companies Act, they are governed by the Companies Act. Ritik Prajapati is asking a very nice question. If some provisions are inconsistent, then what we have to see? Don't say inconsistent. Say that there is a conflict. Later on, you will be studying interpretation of statutes. There is a conflict. For example, Companies Act says something. The Banking Regulation Act says something else. To a banking company, which should I apply? Should I apply the Banking Regulation Act or the Companies Act? I would humbly submit you will apply the Banking Regulation Act. To that extent, the Banking Regulation Act apply. Why? Because Banking Regulation Act is the specific provision applicable to banking companies, whereas Companies Act is a general provision applicable to all companies. So when it comes to banking companies, the Banking Regulation Act will be superior to the Companies Act. You will also find that in many sections of the Companies Act, banking companies will be exempted. This act will exempt them and say, you are not governed, go. You are governed by, you got your own lana, go there. So they will send like that. Mostly they will exempt it. When there are situations of conflict, Companies Act itself will politely say, Baba, you go there, yeah. You are a big shot, you go there, like that they will say. Insurance companies will say, yeah, you got your own law, go there, like that. Okay. So usually when there is conflict, then we would prefer the law that governs them specifically rather than the general law, which is the Companies Act. And if it is a general rule, okay. But suppose the Banking Regulation Act does not have any provision, but the Companies Act is clearly providing, then the Companies Act will apply. Only when the same matter, Banking Regulation Act also is talking, Companies Act is also talking, then conflict. Then BRM. But otherwise, Banking Regulation Act is silent. You cannot say this won't apply to banking company. Okay. You have to be very careful, but it's a very good question. I hope I have given you an answer that you are able to understand or accept. So the other notified bodies incorporated by any law, etc., nothing has been as of now notified. Just it is there. Okay. So in respect of companies mentioned in B2E, the act shall apply except in so far as the said provisions are inconsistent with the provisions of such special act governing. That is where there is a conflict, the special act will apply. I think the answer is there, right there in that box. So Ritik Prajapati, not only have you not seen, I have also not seen my own slide. Your question is very clearly answered by the Companies Act. Again, I will repeat, specifically also specific sections are there where the Companies Act will say this section does not apply to a banking company. This section does not. But if it is not so exempted also, if there is another provision in that act which is inconsistent with, these provisions are inconsistent with that, then the special act only will apply. I think that is clear. Thank you. And moving on. Section 2 of the Companies Act, or for that matter, most enactments, Section 2 will be the definition section. That is, any word used in that section, in that law, for that, if the definition section gives the definition, that is the definition you have to use. See, the word may have a natural meaning, dictionary meaning, but once it is defined in the act, in Section 2 or wherever, and says for the purpose of this act, these are the definition, then only that definition should be applied. I'll be giving you some examples of definition of relative and all. Companies Act clearly defines relative here. Only they are relatives like that. That is how it is. So you have to be careful with definition, which is why, again, when you come to interpretation, you will learn about definitional sections. Normally, the act will define the section. Define the word, if at all it wants to. If it is not so defined, but if it's a slightly technical word, then you may have to go out of the word. The definitional sections in the acts are internal aids, directly binding. If the definition is given, then you have to obey the definition only. Then you cannot argue, no, this word normally it means that, blah, blah, blah. No, this is what it means. Section is clear. Net worth is defined very clearly in this law. Companies Act defines net worth. So if you have learned another concept on net worth in the finance book, that is your problem. Companies Act definition of net worth only should be applied in all sections where the word net worth is mentioned. Similarly, free reserve. Defined. You cannot say, no, free reserves are like this, like that. What is given there only you have to take. But suppose the word is used but not defined. Words and expressions used but not defined. Then, if that is defined in the Securities Contracts Regulation Act, which deals with listing of securities, recognition of stock exchanges and all, that law is there. It was there in your final syllabus, but now thanks to God, they have removed it from the final syllabus. So Securities Contract Regulation Act, 1956. Or, for example, the word stock exchange is defined there. Okay. So if it is used, you can take it from there. Nothing more. Securities and Exchange Board of India Act, 1992. It is there in your final syllabus. When you come to final, you will study SEBI. There, if any word is defined in SEBI, that word meaning if it's not in Companies Act, you can. See, SCRA, Securities Contract Regulation Act, SEBI, and the Depositories Act. We'll be seeing the Depositories Act portion when we come to share capital and debentures, when we talk about dematerialization and all. So those acts also use certain words which are defined there. Those words are used in Companies Act also. Then they will have the meanings respectively assigned to them in those acts. This is coming at the end of Section 2. I'm covering it here. Why? Because if you don't know this, you will ask me, sir, what to do with this word, sir? It is not defined here. If it is not defined here, check if it is defined in SCRA. No. Check if it is defined in SEBI. No. Check if it is defined in Depositories Act. No. Know where it is defined. Then you can go for the normal natural dictionary meaning. Then and only then you can go to the dictionary. When a word or phrase is defined as having a particular meaning in the enactment, it is that meaning alone which must be given to it while interpreting a section of the act. Unless, there should be something repugnant or unacceptable. If you are a little uncomfortable with the word repugnant, you think it's a little difficult to understand or not comfortable with, then don't use the word repugnant. Repugnant chhod dijiye na. Use the word unacceptable. Unacceptable is acceptable, na? The word unacceptable is unacceptable. So you can use unless if you apply it blindly, something stupid will happen, unacceptable. If not, then you have to apply only the meaning given in the act. Okay. This in interpretation also we will study this. When I come to interpretation, I'll tell you. Strict interpretation. Where the words of the statute are clear and unambiguous, then they should be given effect. Whatever may be the hardship caused, not our problem. If you think there's a hardship, then go to the government and inform them, let them amend the act. Maybe retrospectively, but as the law is today, you shall obey it. Okay, now we are moving into the definition. So please note, I'm not directly starting with 2 subsection 2 like that. I'm moving like, so I'm defining body corporate. body corporate or corporation includes a company incorporated outside India. It does not include a cooperative society and any other notified bodies corporate. Friends, I have given here a repugnant means unacceptable. Unacceptable. It leads to some wrong conclusion. Repugnant, unacceptable, or it's not good. We don't like to see it. It's repugnant. It's not good to see. Unless such thing happens, you have to apply it. Okay, is the point. Okay. So repugnant is a very ancient word which is used from Old English. If you don't like it, then change it with unacceptable. So, interpreting a section of the Act, unless there be anything unacceptable in the context, like that. Substitute it with unacceptable. Now, we are defining the word body corporate or corporation. It includes a company incorporated outside India. Company incorporated outside India means it is a foreign company. It is included in the term body corporate. Friends, included, that means what? Indian company is a body corporate. Foreign company, that is company incorporated outside India, is also a body corporate. LLP is a body corporate. Limited liability partnership is a body corporate. Only thing not included specifically is cooperative society. For the purpose of Companies Act, cooperative society is not a body corporate. Normally, cooperative society is a body corporate. Under the general law, cooperative society is a body corporate. When do you say it's a body corporate? If it has two qualities, it becomes a body corporate. It needs two qualities. Okay, I'm not going to give you what they are. A lot of you are very intelligent, like Darshan, others. What are the two qualities of a body corporate? The unique qualities of a body corporate. Two unique qualities of a body corporate. You can give me an answer. I will wait. In the meantime, I'll proceed, but let me wait for those answers. So as of now, I've told you body corporate includes a foreign company incorporated in India. Incorporated in India is also included. Other notified bodies corporate like LLP and all included, but cooperative society not included. But body corporate has two important qualities. Two important qualities, including company also has those two qualities. What is that? You studied it in BCom or foundation. It has two qualities, minimum two. One more is there, but that's not compulsory. Two definite. It should have that. Yes. Artificial person, you leave it. Again, you are making the question. What is that artificial person has? Correctly told by Sudhanshu Shekhar. Limited liability, no. Limited liability only for company. By Darshan, which is separate legal entity. Body corporate has separate legal entity. Entityship. So it is a separate legal entity. What does that mean? See, are you a separate legal entity? Yes, you are. You are a natural person. So what does that mean? When I say you are a natural person, you have separate legal entity. What does that mean? It means Sudhanshu Shekhar can hold properties in his or her own name. In his own name. Can file a suit and be sued in your own name. So, ability to hold property in your own name, ability to sue others, means file a suit in the court of law, proceed in the court of law, or be proceeded against in the court of law, in your own name. This is called, see, partnership is not a body corporate. It doesn't have separate entity. You cannot sue a partnership. You can only sue the partners. Are you able to understand? Whereas, if any debt is due by the company, you do not sue the directors. You do not sue the shareholders. You will sue only the company, because company is a separate legal entity having perpetual succession. That is correct. Kiran Shukla gives the correct with perpetual succession. Perpetual succession means even if all the owners die, they will be replaced by their legal representatives. Therefore, the company will never die if the company's life is not defined by the life of its owner. Owners may die. Company will continue. That is called perpetual succession. Killing the company itself is possible. How? By a process of law. It is called dissolution. Winding up and dissolution. That is the legal process for killing the company. Merely, see, if all the partners of a firm die, the firm is automatically dissolved. not for company. Company will continue. Even though, because the minute these people die, their legal heirs or representatives automatically come. They should be recognized as to be transferred. That comes later. That's a procedure. But automatically the legal representatives become the owners. Company continues. So this one. Common seal today is not compulsory for a company. Earlier common seal was needed. Today under the new law, common seal is not a big thing. You can have if you want, but that is not defining you. That's the point. But still in those days you used to say 3. Separate legal entity, perpetual succession, common seal. Now common seal is not so important, but good to mention. Limited liability is a peculiar quality of a company. Okay, not for a body corporate. Only for a company incorporated under the Companies Act or incorporated outside India. See, again, a company itself may or may not have limited liability. Later on, when you come to incorporation, we'll talk about unlimited liability company. Are you able to understand what I'm saying? So, limited liability is not a quality of a body corporate. Whereas, separate legal entity, perpetual succession, body corporate. So, body corporate is a wider term. Shahana Balaji, I have told you about common seal. It is not compulsory under the new law. Got it? There will be a common seal? No. There may be a common seal. If you want, you can have a common seal. Nobody is preventing, but not compulsory. That is not a quality. Notified companies are not exempted. It does not, it does not include a qualification to any other notified. See, they want to remove certain items from the list. That's all. It is their choice. As far as you are concerned, Mr. Darshan, be very clear. Body corporate includes a company incorporated outside India. That is very important for you. Okay, why these cases are exempted, leave it. Okay. Company incorporated outside India is included here, which means now onwards, when you are reading the Companies Act or reading the provision of the Act in the material, the minute you see the word body corporate, be alerted. Includes foreign company, includes company incorporated outside India immediately. Whereas if you see SURF company, only company, then only company incorporated under this Act or under any previous company law. Are you able to understand? So be very, very careful which section is being used, which word is being used in the section. If the word body corporate is being used, includes company incorporated outside India. Whereas if you see only company, it means only company incorporated in India under this Act or an earlier company law. I hope this is clear. Under the Companies Act, companies can be body corporate, or if they are not notified, then they are body corporate. For example, LLP is not notified as not a body corporate. So it is a body corporate under the Companies Act. Whereas cooperative society is notified and said, no, it is not a body corporate. Okay. So instead of wasting our time asking only companies can be body corporate, don't worry, you can say this. Company is a body corporate. Company incorporated in India is a body corporate. Company incorporated outside India is a body corporate. So if the word body corporate is used in this Act, it means company incorporated in India and company incorporated outside India. So the word body corporate is restrictively definitely here. But once you leave the Companies Act and go out to another law or unconnected law, body corporate is a wider term. It includes cooperative society, everything is included, which has separate legal entity and purposes. But here, for the purpose of this Act, they have given a restrictive meaning. Okay. Rahul, what you are asking? One sec, I'll check up. I'm not able to see. Rahul, does partnership come in? No, I mentioned partnership is not a body corporate because it does not have separate legal entity. Your question is clearly coming. Don't worry. I'm able to see it. What happens is everybody is asking, so I'm missing it a little bit, but no problem. So partnership is not a body corporate. LLP is a body corporate. Limited liability partnership is a body corporate because it is incorporated under the LLP Act. Whereas partnership, SURF 1932 Partnership Act, a partnership is not a body corporate. Got it, Mr. Rahul? Can you confirm that you have heard my comment, that I have answered your question? Just confirm it. I mean, if you understood what I said, confirm it. That way, I will also know that you have got my point. Okay. And now, Ritik ji, don't do like this, ma. It is not correct. Body corporate includes company incorporated outside India. Company incorporated in India is also body corporate. Body corporate is a bigger term. Body corporate, see, think in set theory. Look at it. Under the Companies Act, there is one big set, universal set called body corporate. In that, there are two subsets. One subset is company incorporated outside India. Another set is company incorporated in India. Got it? Only these can be there in that body corporate set. Both are included. So body corporate and company are not different. Body corporate includes company. But company, all companies are not bodies corporate. But all bodies corporate are companies under the Companies Act. Got it? So when you say purely Indian company, that is a body corporate. But foreign company is not a company in the under the Companies Act. Foreign company is only a body corporate. Whereas Indian company is body corporate and also company. So when the word company, you can maybe I will answer it different. The next question I will rephrase it. It means company incorporated outside India is not a company under the Companies Act 2013. Company incorporated outside India is not a company. Company incorporated outside India is not a company under the Companies Act 2013. But it is a body corporate. So the word body corporate is not different from company. It is wider than company. Correct. Now you understood. Body corporate is wider term and includes both companies incorporated in India and also companies incorporated outside India. Right? Now see, I am teaching these definitions to you now. It is going to become relevant to you only when you come to final. Because only in final we will be teaching you companies incorporated outside India. Okay, because it comes in that syllabus. But remember at that time that body corporate. So what you need to do is, whenever in the act, when you are reading the act, if you see body corporate, remember, it includes company incorporated outside India. But if you see only self company, be careful. Only Indian company. Company incorporated in India. Okay? That is all you have to understand from the section. Don't keep confusing and running around. See, again, I'll tell you one thing. Students who are clear, students who are focused in understanding the subject, get high marks and pass and go away. So, students who have only questions, they get so much bogged into the questions part that the clarity of understanding is not there. This is something I'm sorry to make this comment, but not to discourage you from asking questions, but to discourage you from getting confused into this. I am giving the clarity. Now just hold on to that clarity and come with me. We'll get out of this subject. But if you leave this and go here and there, you will get caught and I will have to bring you back, hold you and take you on. So just follow. The clarity is there. Companies incorporated outside India should be called foreign company. But that is what, when you come to final, we will teach you that foreign company itself is a subset of companies incorporated outside India. The word foreign company is defined in that section. Means they should have a place of business in India and all. Whereas there could be a company which does not have a place of business in India, but which is incorporated outside India. So that will also be company incorporated outside India. There could be a company incorporated outside India which has a place of business in India. That will be foreign company. Like that. They further defined the term foreign company a little more restrictively. But not to be worried. Not in your syllabus. Don't worry now. Okay? Loosely we can call foreign company, but I don't normally do that because the word foreign company is defined restrictively elsewhere. Don't worry. So we already saw this. What is a company? A company is an artificial person created by a process of law, having separate legal entity and perpetual succession. Right? So what do you mean by separate legal entity? A company can sue and be sued in its own name. Sue and be sued means the company can proceed against anybody in a court of law and can also be proceeded against. Somebody can file a case against the company in its own name. Example, partnership firm cannot be sued in its own name. Only in the name of a partner it can be sued. Only partners can be sued. Because the firm doesn't have a separate legal entity. It can buy, hold, and otherwise deal with property in its own name. Okay. Now, perpetual succession means that the company will continue to exist even if all its members die. Death of members will not bring an end to the company. Again, compare with partnership firm. If all the partners die, the company is automatically dissolved. Firm is automatically dissolved. A company being created by a process of law can be destroyed only by a process of law called dissolution. I mentioned all this to you, so I'm just rushing through this. Okay. Normally, when the company is operating and functional, that is going concern. I think you are familiar with the term going concern. See, the word going concern itself is a dangerous term. You and I, see, you are all experts in accounting and you are, I'm sure, too good in accounting and all, financial reporting, all that stuff. I am okay. I am not as intelligent as you. But see, when I use the word going concern, you will immediately understand what I mean. That the company will be operating and functional for a reasonably foreseeable future period. A reasonably foreseeable future period, the company will continue to operate, be able to pay its debts in full and function and run. So you are clear going concern now. But once for a group of entrepreneurs, slightly coming from a rural belt, I was conducting a program. When I said one of the important concept of accounting is going concern concept. Immediately, sir, what do you mean, sir? My company should go, sir? Going, sir? Like that he's asking. No. Going means not that going. Going. Okay, it is going on. Okay, very difficult. Okay, to make him understand. But when the company is a going concern, when there's a company will continue to operate and pay its debts, etc., for a reasonably foreseeable future period, then the owners are called members. Those who hold shares are called members. The word member is defined in the Companies Act. The word member is defined in the Companies Act. I am giving section numbers along with these notes. I am giving section numbers, but section numbers are not relevant. If you cannot remember, no problem. Leave it. If you can remember, good. Otherwise, chhod dijiye, please. Don't bother. Thank you, Mr. Darshan. I'm happy to say that you are finding it interesting. Now, coming to the point. Member in relation to a company means subscriber to the memorandum of the company. Later on, when we come to incorporation, we'll talk about memorandum. So, those people who sign the memorandum and bring the company into existence, those people who sign the memorandum by signing or subscribing, they bring the company into existence. They are called subscribers to the memorandum. So, a subscriber to the memorandum shall automatically be deemed to have agreed to become a member, and on its registration will be entered as a member in its register of members. So, the minute, in fact, when I come to incorporation, I will show there will be something called subscription clause. Okay, in that subscription clause, we will say, we, the several persons whose names are mentioned below and who have signed our respective signatures, agree to are hereby desirous of forming a company and agree to take the shares mentioned against our respective names. So, the memorandum itself is an agreement. It's also called association clause. Subscription clause or association clause. So, they are deemed to have agreed. And once the company is incorporated, they become member. Right? Then, every other person who agrees in writing to become a member of the company and whose name is entered in the register of members. See the two aspects. Agrees in writing to become a member and whose name is entered in the register of members. Later on, when you come to prospectus, I will tell you that the prospectus is not an offer. You studied that in Contract Act in your foundation or BCom. The prospectus is not an offer. It is only an invitation to treat or an invitation to make an offer. When the application is submitted, that person agrees in writing to become a member, he makes an offer. And when the shares are allotted, the offer is accepted and the contract is complete, and then he will become a member and his name is entered in the register of members. So, For a person to become a member after the subscription to the memorandum over, every other person agrees in writing to become a member whose name is entered in the register of members. Okay. Every person holding shares in the company and whose name is entered as beneficial owner in the records of a depository. Nowadays, what happens now? Later on, when we come to share capital and debentures, I will tell you more about it. As of now, just I try to understand. Listed companies' shares are dematerialized. They are not held in physical form. Transfer of the shares happens in electronic mode. That too in the stock exchange, on virtual stock exchange, where transfer happens virtually. Company's role is zilch. If you sell your share now, today if you have sold your share in the marketplace, or if you have bought the share, within T+2, that is 48 hours, the shares will be credited into your DP account. Means your name will be entered in the deposit records of a depository as the beneficial owner of the share. You will automatically become a member of the company. Yeah, I purchased, I think, I don't know how much I purchased, 200 shares of Wipro yesterday. Why? Because Wipro has gone for a buyback. Later on, when we come to buyback, I'll tell you more about it. But just look up. Wipro has gone for a buyback offer. Wipro Industries Limited has gone for a buyback offer. We'll come to that. When I come to buyback, I'll again discuss Wipro buyback because the recent buyback. It's happening just today. Ajto it started. Wipro buyback started today. Now, so Wipro buyback is at 445 rupees. Market, the share is going at 381 rupees. So I thought, okay, chalo, anyway, see, if the company itself is willing to pay 445, market is underestimated this fellow. Definitely market will correct itself. So my buy 200 now, offer the, I'm having some 1,000 shares or so of Wipro, yes, 1,000 shares of Wipro. So as well, we will give the Wipro shares and we will give it at 445. Whatever they accept, okay. Anyway, he is accepting 40 shares. Those 40 shares I'll buy back at 380. I would have purchased at 381. A difference profit straight away. Got it. Otherwise, I'll hold it at 381. 100% market will correct itself. Will go up to 500 or 550 easily in the next 9 months or so. Sorry, not to talk about share market and all, but to make you understand the principle that shares. So what happened? Yesterday, I bought Wipro shares. Today, I paid for it. Tomorrow, it will be credited in my account. I become a member of Wipro to the extent of 200 shares. Are you able to understand? So once my name is entered as a beneficial owner in the records of a depository, I become a member of that company. So, yeah, I am an investor. To answer you, obviously, I'm an investor. Boss. See, I'm also, unfortunately, a practicing chartered accountant. And why I say unfortunately, because, see, when you join a large, once you become a chartered accountant, you will join a large company. For example, Wipro. And Wipro will take care of you. They will have PF, ESI, pension plan, this, that. For a poor chartered accountant in practice like me, nothing. No. Now itself I'm old man. In further old age, who will support me? So for that, I have to create a pension fund. Now that I have to only do. Who will do it for me? Okay. Definitely not somebody else. So that is, I'm an investor. Yes. I'm a value investor, portfolio investor who creates my own portfolio for long term. Chalo. Now, is there any change in this batch compared to not? I'm not able to understand your question. You mean syllabus-wise any change? No. Syllabus, no change. Everything is the same. Is that what you're asking? Topics covered wise? Same. Okay. So that is my, if that is the question, this is my answer. So you have understood definition of member, right? But when the company is going to be wound up, that is, we are no longer going to run the company. We are going to dissolve it. We are going to close it. Then that member ka naam will go. It will become new namakaranam. That is, he will be called contributory. Kyun? Because if it is a partly paid share, the member has a liability to contribute. Now, liability to contribute. Now, so to that extent, he is a contributory. But even a person holding fully paid shares shall be called contributory. But though he has no liability, he will have rights now. In case there is a surplus, the contributory only will get that surplus now. Suppose the company's assets are sold, all the liabilities are paid, and every person is invested 10 rupees. After selling all the assets, we are getting 40 rupees per share. That extra 30 rupees who will get? Contributor only will get. So though he is called contributory, even a fully paid shareholder will be called contributory because he may not have any liability, but he has the right to receive surplus on the dissolution. Okay, good. What is depository? I will teach when I come to share capital and debentures. Just to hold on, thoroughly I'll teach. Now, if I go to that route now, we'll be wasting time. I'll be detouring. So, to explain it fully now, in context, I will do it. Don't worry. I will talk about the two depositories, etc., etc. Everything I will teach. Idam Vakshyami Aseshata. Without any gap, I will teach you. But Abhito, just take it on advisement. The depository means when shares are dematerialized, they are held in the electronic form. That the person who holds it in electronic form, that custodian is called depository. Simple way. But there's more to understand. Basically, the depository is the custodian of the electronic records. Otherwise, there will be fraud. When once shares are in electronic mode, a trustworthy person should be the trust custodian, right? So the electronic form, it is held in the records of a depository. There are two depositories, NSDL and CDSL. More about it when we come to share capital and debentures. Member liability. Quickly answer this question so that I can move on to my next question. So, for a limited liability company, okay, the liability of a limited liability company is limited. True or false? The liability of a limited liability company is limited. True or false? Now you can answer now. True or false? The liability of a limited liability company is limited. True or false? You can give your answer. Huh? Who you? True. Miss Bosley, come on. From the western region, Bosley, very famous name. Including Chhatrapati Shivaji was a Bosley. I'm sure you know that. Chhatrapati Shivaji himself was a Bosley. Bonsley is there, Bosley, all I think same. I don't know, maybe I'm wrong. I read somewhere that Chhatrapati Shivaji, one of my favorite heroes of Indian history, was a Bosley. Only a few people are telling false. Prasannaji is telling false. Komal Prajapati is telling false. Sudhanshu Shekhar. I find Sudhanshu ji is a pretty aware person. Right now, the answers given by him are all very correctly given. Liability of its member is limited. Liability of company cannot be limited, Baba. The company has to pay all its liabilities. Please, whatever is due by the company, it has to pay. How it can say my liability is limited? But member ka liability limited. See, in a partnership firm, the partner ka liability is unlimited. Meaning what? For the liability of the firm, you can attach the personal asset of the partner. Whereas for liability of a company, you cannot attach the personal asset of the shareholder. So liability of member is limited. Correct, Bosley. Thank you for confirming that my favorite hero is a Bosley. Okay, so LLP also limited liability, meaning what? Partner's liability is limited, not of the LLP. LLP has to pay as much as it is due, but member has to pay only as much as he owes. I repeat, company has to pay as much as is due. Whatever it owes, whatever is dues, it has to pay fully. Whereas member should pay only as much as he has agreed. Means, what is the amount agreed? So now come to the point. The liability of a member of a company is limited to the extent he has, to the amount, if any, unpaid on the share. For example, suppose a person is holding fully paid shares. What is his liability to the company? If a person is holding fully paid shares, the company is being wound up. What is his liability to contribute towards the assets of the company? A person is holding fully paid shares, 10 rupee share fully paid up. What is the liability to the company? 10 rupee share fully paid up. What is the liability to the company? 10 rupee share fully paid up. What is the liability to the company? 10 rupee share fully paid up. What is the liability to the company? 10 rupee share fully paid up. What is the liability to the company? 10 rupee share fully paid up. What is the liability to the company? 10 rupee share fully paid up. What is the liability to the company? 10 rupee share fully paid up. What is the liability to the company? 10 rupee share fully paid up. What is the liability to the company? 10 rupee share fully paid up. What is the liability to the company? 10 rupee share fully paid up. What is the liability to the company? 10 rupee share fully paid up. What is the liability to the company? 10 rupee share fully paid up. What is the liability to the company? 10 rupee share fully paid up. What is the liability to the company? 10 rupee share fully At the time of winding up, anybody? So those of you who said true, please note it. The liability of a company is not limited. The liability of the member is limited. Hope you got it. Correct. Bhumika says liability of member is limited up to the amount unpaid on shares. Correct. Darshan gives the correct answer. 0. Fully paid shares, the liability of a contributory is 0. Because everything is paid now, what more? Only to the extent, as rightly pointed out by Bhumika, only to the extent up to the amount unpaid on shares is the liability. Okay. Later on, I'm so happy that you are there. And I'm thankful to you for answering, because now I know the level at which this batch is there. You are all well aware. So I will not waste your time when we come to types of companies, limited by shares, limited by guarantee. We can proceed. What do you mean by that? Good. So, thank you. Beautiful, Bhumika. Nil, because it's holder of fully paid shares. Beautiful, beautiful, beautiful. Uncalled up call liability of share. Wow, Vaishali Bindal. The liability on the uncalled portion. Beautifully said. Beautiful. In fact, you people are already one level of platform level in company law knowledge. I now understand that I need to take you from wherever you are now to another level, which is really tough task. Okay, let me try. I will do my best to help you to understand from further, more intensive aspect of company law, beyond where you know now. Let us. Okay, moving on. Register of companies. See, the registrar of companies. I'm sure you heard of this guy. Registrar of companies. He's called ROC. He is there in every region. Every state there is one registrar, etc. That guy's job is to maintain register of companies. That's why he's called registrar. Whenever a company is registered, it will be entered in the register of companies. Whenever a company is incorporated, it will be entered in the register of companies. That is the register maintained by the registrar on paper or in electronic form. Today, the registrar maintains the register of companies in electronic mode. So you can go to the MCA website, Ministry of Corporate Affairs, and I think you have to get a login ID. I think you have to have a login ID. Once you get the login ID, you can go there and search the register of members, companies. All you need to do is search. So if you want to look for Mannar and Company Limited, then you will put Mannar and Co Limited. If such company is there, it will come and you will be able to see. In fact, as you are typing out the name, it will start, the drop down will come. So if you start MANN, then MANNAR, Mannar and Co. Immediately you go there, click on that, then you go to Mannar and Co. So you can see who are all the shareholders, who are the directors, when was it incorporated, everything you can see. There is a public record. The register of companies is a public record. It is available for any person to inspect. Anything uploaded into the Ministry of Corporate Affairs website is publicly available, can be seen by anybody. This is very important concept. Please, later on when we come to incorporation doctrines, we will talk about that. Why once it is uploaded in the register of companies or the MCA website, which is the register of companies website, MCA website, it becomes public document. Everybody can go and access it and read it. Now, theoretically, there was a company in France which was formed with limited liability for its members, which was theoretically the first. But that was around 1570 or 1580. But for record, clearly for recorded company, first ever company was the English East India Company. The English East India Company was chartered on 31/12/1600, okay, making it the first East India Company. But though the Dutch East India Company was incorporated a little later, so in terms of chronology, the first is English East India, but the Dutch East India Company was a powerful company, financially strong. They were the first company to be having shares traded on a recognized stock exchange. So the Dutch East India Company, because the Amsterdam Stock Exchange was the first stock exchange in the world, and the Dutch East India Company shares were quoted, and they were quoted at a very high price. In fact, many people made millions in that. Whoever invested in the Dutch East India Company, in a matter of 3-4 years, they became millionaires. When it got listed and traded, there was such a demand for this company ka share that they became overnight, they became millionaires. So that way, the invention enhanced the ability of joint stock companies to attract capital from investors. Because earlier, it was always a risk, partnership firms, you have to trust somebody. Now nothing, you're risk mitigated. If you pay share only to the extent, if at all your loss will be what? If you have invested 1 lakh in that company and the company dissolved without anything, if it becomes insolvent, you lose 1 lakh. But your assets will not be taken for the debts of the company now. So people now had confidence to invest. And thereafter, we started having the, growth of companies over a period of time. Then the Americans started coming and their companies became big, so on and so forth. You might ask, what happened to the Dutch East India Company? It survived for a long time, but it was not able to operate at the same way as English East India Company. Simple, see, the Dutch had a very good, shall we say, foothold in Africa. They were very strong in Africa, but they could not enter into India because the British, were aggressive. They destroyed everybody who came. Portuguese destroyed. Dutch destroyed. Destroyed means they sort of aggressively, politically, they moved and they created. Thereafter, they had a commercial empire. But the commercial empire of the British was founded on the political empire. So they killed people, the wars. They conquered the country and then they made commercial sense. So that is why the East India Company were ruthless. The English East India Company were ruthless. Just for your information only. Okay. The French were the only people who could have a foothold in this country. And that too in small pockets like Karaikal, Puducherry, Daman, Diu, Yanam. Small pockets they were able to, Krishnanagar and all. Small pockets they were able to have. Otherwise, the British controlled it everywhere. Okay. Yeah. Darshan is asking whether any nominal fee is there. To my knowledge, no. If you want to download only, you have to pay. Suppose you want to download some file, some paper, you have to pay. Just to look at it. So technically, there is no need for fees. You can go and have a look. Okay. Good. Now, we come to classification of companies based on liability. Since now you have already answered my question, it will be easy for you to understand. There are 3 types of companies. Companies limited by shares, companies limited by guarantee, unlimited liability company. So, company limited by shares, the liability of its members is limited by the Memorandum of Association to the amount, if any, unpaid on the shares respectively held by them. Unpaid, uncalled. Okay. Company limited by guarantee. The liability of the members is limited by the Memorandum of Association. In the Memorandum of Association, later on, when you come to incorporation, I'll tell you, there will be a liability clause where you'll have to clearly mention the liability of the members of the company is limited to the amount, if any, unpaid on the shares, respectively by them. Or the liability of the members is limited to such amount or is limited as given below, wherein they will undertake to contribute to the assets of the company in the event of its being wound up. So, in the memorandum, they will mention how much they are agreeing. So, the amount undertaken to be contributed. In case of winding up, at this point in time, they won't give anything. Usually, limited by guarantee is used for socially useful companies. For example, company for promoting arts and science, or company for promoting some fine arts, company for promoting sports. Especially, you will be seeing very shortly Section 8 company. At the incorporation, we'll talk about Section 8 company. Usually, Section 8 companies could be companies limited by guarantee. See, for example, 5 people come together, they spend some money and form the company, and then they say, look here, in case some debts are there and the company is going to be wound up, I will contribute 10,000. I undertake to contribute 10,000. 10,000, so totally 1 lakh. 10 people form it. No problem. They can go ahead. Later on, they will take donations from people and start the company. In case there is any problem and the company is wound up, each person is liable to contribute to the amount undertaken to contribute it, which is 10,000. That's all. His liability is limited by guarantee. Usually commercial companies will not be limited by guarantee. I repeat, commercial companies, the purpose of which is to make profit, commercial will not be companies limited by guarantee. They'll be limited by shares only, because they may want to allot shares to the public and they might want to have these shares listed. So they will always go for limited by. What could happen is there could be a company limited by guarantee having share capital. The combination they can have. They could have it limited by guarantee, but also have shares. Could possible. Okay. But if they want to do commercially, 100% they will have share capital. For your information. Now, unlimited liability company. A company not having any limit on the liability of its members. You might ask me, why would somebody want to even do this? I will ask you the same question. Why would somebody want to even do this? They can as well form. See, they can even go for LLP. Why go for ULC? I will tell you. See, there are some situations where a partnership firm may be, wound up under this act. Okay, in those cases, that will be treated as an unlimited liability company. One. Secondly, there may be somebody wanting to form unlimited liability company. No problem. That is his wish. There is a provision in the law now for him. That's all. If somebody wants to form an unlimited liability company, there is a provision. But number of unlimited liability company, very less. Negligible. So don't worry about that. 98% of the companies would be company limited by shares. Few companies guarantee. Very few companies unlimited. So don't bother. If somebody is saying my companies, there is liability is unlimited, will you become shareholder? No. So why they are forming? That is their problem. Yeah. If some donkey is willing to become a member of that company, let it become. We are not preventing. But one thing they will say, the man should be clearly told that he is becoming a member of an unlimited liability company. If the company is wound up, who will get such a contribution of guarantee? Baba, that money has not been given. They have only promised to give in case there is a deficit. Are you able to understand? In case there is a deficit. Okay. So if it is a company limited by guarantee, not having share capital, then they might also fix the shares. They might also fix the shares. So in that share, they will take the surplus away. But again, I'm telling you, if you are going to operate commercially, then I would suggest don't go for company limited by guarantee. Go for company limited by shares. Only not-for-profit organizations will prefer limited by guarantee. In which case, in the case of winding up, if there's a surplus, then that surplus cannot be distributed to the members. It has to be transferred to another undertaking with a similar object. Are you able to understand what I'm saying? So don't bother. See, that's what I'm saying. If you try to put a commercial example into limited by guarantee, you will not be able to get a correct answer. So that's when this is not an elegant method of running commercial entity. You go for limited by shares. Don't use limited by guarantee. Unless there is a need for that. I don't see a need. If you are running a commercial enterprise where you're going to manufacture goods, buy and sell, don't come near company limited by guarantee. Go for company limited by shares. It is your choice. Who is forcing you? If somebody coming and telling, no, you should form company limited by guarantee. No, you have a choice. Go for company limited by shares only. So this is how, I will be handling most of the questions. Instead of putting myself in an unnecessarily confusing area, I will simply avoid and go to a clear area where there is no problem. I will be there. Why come here and then say what to do? Why are you coming here? Don't come here. Go there. This is not meant for commercial enterprise. This is not meant for a situation where there will be a surplus on thing. For a company limited by guarantee, not for profit, surplus cannot be distributed. It has to be transferred to another company or organization with a similar object. Can we say that usually unlimited liability company is not slightly, extremely impracticable? Okay, impractical and impractical spelling, check it out. IMPRACTICAL, impractical. Practical, impractical. Okay. So, whereas particle, PARTICLE, particle. English is an unfortunate language. Though I speak English and predominantly I'm an English speaker, I agree English is a confusing language. Treacherous language. Agreed. Okay. But sometimes you have to be a little careful. Sorry, I'm for correcting your spelling, but Sometimes I do that. So it is not slightly impractical, extremely impractical. Provision is there. See, my guru, Professor K.S. Anantaraman, used to say, when you're in the railway station, there will be a site of a kind of fountain type of thing, with sand in it. That is called spittoon. When you're chewing pan and you want to spit, you will spit into the spittoon. You shouldn't spit on the floor or on the wall. You should spit into the spittoon only. That spittoon is there now. Why is it there? If you want to spit, you spit. Sir, if it is spittoon is there, just for that you don't have to go and spit. It is available. It's called enabling provision. There is a provision for forming unlimited company. If you want to farm. Why you will want to farm, God only knows. What is the joy you will get from farming the company? Some joy. Even if you farm, which donkey is going to become member there, I want to see. Let us say you want to form unlimited liability. So you call your friend, Mr. Sundar. Sundar, I'm going to form unlimited liability company. Wow, what a great idea. If you once you invest in that company, whatever the company's liability, you have to pay. Wow, I'm so thankful to you. I will become member immediately. Will any friend tell like that? They'll say, oh, is it so? Hey, I have a small appointment, ma. I'll see you later. And that's it. You will never see that friend again. Am I correct? So, absolutely impractical. Okay. Don't even attempt it. Simply it is there. Kya? You ask, I don't know. Two people will know. One, the Ministry of Corporate Affairs secretary who drafted the law at that time, God. I'm unable to communicate directly with God. This gentleman, I'm unable to access on the phone. So kindly don't ask me how. Okay, leave it. Chod dijiye. In fact, my guru used to say, remove it from the act. This should have been removed at the time of forming Companies Act 2013. Maybe I'll tell you, there were certain unlimited companies under the old law. There were certain unlimited companies under the old law. They are still there now. In order to govern them, they have given this, is what my understanding. Newly, I don't know. Maybe I'll do some research and get back to you whether any unlimited companies are there. Seriously. If any client comes to me and says, I want to form unlimited liability company, I'll say, why? Then I will say, don't be a fool. If you don't like to form company, form LLB. Are you able to understand? Be practical. Okay. Now, as I mentioned to you, Reliance Industries Limited, another favorite company of mine. I have about 1,600 shares of Reliance Industries Limited, out of which, I acquired 300 shares only in 2002 at, I think, 95 rupees or 100 rupees. I obtained the shares. Thereafter, they started giving kuti, that is bonus. It started growing. I never bought. After that, again in 2008, after the global financial meltdown, the Reliance price fell right down to 300, 400. Again, I purchased Reliance Industries. Again, kuti, it became. Then these two fellows, the two brothers fought. And when they fought, they divided the company. When they divided the company, that was in 2007. 1,000 rupee value, the share I bought for $100 went on to become 1,000 rupees per share. Great. Then Mukesh and Anil had a fight. Anil took away those 5 companies. Those 5 companies shares also I got free. So I had my Reliance share and those 5 companies. And absolutely, I will not trust Anil Ambani. Straight away. Why and all, don't ask me. I don't trust Anil. That's all. I trust Mukesh. So the minute those 5 companies got listed, I sold that shares. Totally, it came to 1,000 rupees. Straight away, 1,000 rupees. Okay. Why I'm telling all this story to you now? Just to make the class a little more interesting. But why am I even mentioning Reliance Industries? Because in the recent past, that was in 2020, during the peak pandemic period, Reliance Industries Limited offered 422626894 normal equity shares of 10 at a price of 1257 per equity share. The amount was payable in 3 installments. In other words, Reliance Industries Limited in the recent past issued partly paid shares. Partly paid. These partly paid shares are listed on the stock exchange. You can go and check out. Reliance Industries, there will be 2 fully paid shares will be listed. Partly paid also will be listed. So on application, you had to pay only 314 rupees 25 paisa. 314.25 was to be paid in May 21. They never made that call. 628.5 in November, they never made that call. Okay. Now, Mr. Deepak applied for the right shares. So he was entitled. If you already existing shareholder was entitled. For every 16 shares, you got 1 share. So you are allotted 100 shares. So he paid the amount due on application. What is the liability of Mr. Deepak with respect to his shares in Reliance Industries Limited as on 30th April 2021? I think it's a very simple question. You can give me an answer. These partly paid shares are still listed. See, I did not apply for those right shares. Yeah. Instead, what I did, I sold the right share. I sold the right itself. The right itself per share, the right itself could be sold for something like, I think I got 300 rupees or something, 330 rupees. For the right itself, I got. Per right, I got 330. At that time, the share was going in the market at something like 1,000, some 400, 300 or some 400. Now, what I did was, I sold the right, I got money, then I purchased the share in the market at that time. Some 1,375 or 380, I purchased the market. Which means what? My price is now 1,000, even I think it came up to 1,400 something. My price was 1,400 minus this 325, which I got for my right per share. So that became my price. That was lower than 1,257. That was lower than 1,257. So if I do this now, if I sell the right and I buy the share in the market, I was getting at a price better than 1,257. So that was the calculation at the time. I have it in my notebook somewhere. I can check it out. But clearly, it was becoming profitable for me to sell the rights and buy the share in the market rather than apply for the rights and then pay. It's still costly. So that is great. Now, yeah, in the course of my lectures, I may give you some ideas on value investing. Obviously, I cannot use this course, this class for teaching value investing. But some hints are already coming to you. Every time I said I'm buying, go and check out the time when I bought. 2002, 2009. When the market was down, I bought at prices that were extremely low. And I bought blue chip companies that are going to always perform well. And the market is undervaluing them. When the market itself is down, these good fellows are also getting undervalued. That is when you buy. This is first lesson in value investing. Okay. Which means you can't buy now. So don't buy. Now is not the time to buy. Okay. So this is something you will hate. Because today, Ajto, you want to do something now, go there and buy now, buy something, buy Tobacco Limited, buy it immediately. Small company, buy. Small cap shares, buy. No. Keep quiet. When the market goes down, that is when you have to buy. First lesson in value investing. Anyway, going on. Yes, liability of Deepak will be 314.25 plus 628.5. Am I correct? So that is 942.75 into 100, 94,275. Correct? Beautiful. So this is the amount, if any, unpaid. The liability of a member of the committee is limited to the amount, if any, unpaid on the share. Ms. Swati, how do you say as on 30th April, Deepak liability is nil? Because on application, you would have paid only 314.25. The next call is going to be made only in May 21. On 30th April 21, he still has a liability now. The liability is exactly as pointed out by Prasanna ji and others, 94275. Not 31425. 31425 is only second call, first call. There are other calls there, 628.5 call is also there. So two calls are there. Both the calls have to be taken. So Bhumika is taking only one call. His liability on 30th April is both the calls, 314.25 plus 628.5. The liability of the member is the amount, if any, unpaid. Please listen to my words. Please look at the definition. That's what I'm trying to, that is why I'm giving practical example. The liability of its members is limited by the amount, if any, unpaid. Don't worry about call. Call, not call, no problem. If it is unpaid, it is liable. Amount unpaid is 942.75. Got it, Mr. Darshan? Chala. See, I'm teaching share capital here so that I will not waste your time when you come to share capital and debentures on fundas. Here itself you learn the. So for a sole proprietor, capital is the balancing item. It is excess of assets over liabilities. So simply you take assets in the books, liability, difference is capital. Balancing item. Always the balancing item. It is excess of assets over liabilities. A sole trader can withdraw the capital of the business. You have done it now. See, for example, when you're doing sole proprietary accounts, you might have a negative capital also. Sometimes you have negative capital. What to do? But company, no. Same for partnership also. Partner can draw more than his capital. Nothing. The law does not prohibit. Whereas this changes totally with the company. The liability of the member of the company is limited. Creditors of the company cannot attach the personal assets. Therefore, the share capital of a company has to be a fixed amount, which cannot be withdrawn by a member at his will and pleasure. It is locked, fixed capital. So many shares of rupees 10 each. Okay, that is the capital. Got it? Beautiful. So this is called share capital. That is why the capital of a company is called share capital. It is divided into smaller units called shares. Share means a share in the share capital of a company and includes stock. Later on, when you come to share capital, the share capital of a company is an amount divided into smaller units called shares of equal value. So, share means a share in the share capital of a company and includes stock. Don't worry about stock. What is stock? I will explain. With that, you don't bother. There is no company in India which has issued stock, but they have included stock here. What is stock? See, when we are trading in a company share, the trading volume may be huge. So, instead of trading in one share, two shares, they might combine, say, 100 shares and make it into one stock. So, they will combine 100 shares for the purpose of trading in the stock market. They will combine 100 shares into one stock and they will sell one stock, two stock, three stock. That means minimum unit of trading will become 100 shares, which will be combined into one number called one stock. This for convenience of trading, that's all. And no company has issued stock, nor has it converted share capital into stock. I have explained now you understand now. When shares are combined together into blocks, each block is called a stock. Why is it done? For the purpose of easy trading. But in India, no company has converted share capital into stock. They are not exactly the same. Stock is a consolidation of shares. So if a company is having 10 lakh shares, they will be combined into 10,000 shares of rupees, 10,000 stock units. So 100 shares will become one stock. So 10,000 stock units. So it becomes easier to buy and sell. So instead of buying 100 shares, I will buy one stock, two stock, three stock like that. So again, I am giving the explanation to help you understand stock. But in reality, no company has issued stock. Only shares only are listed on the stock exchange. Shares are freely transferable, subject to certain reasonable exceptions. We'll see that. When a company can refuse to register, transfer. But for that, no company can refuse to register transfer of shares. It is not. The board of directors has no right to refuse. They have to register. That's all. We'll see that when we come to share capital and debentures. About transfer of shares, we will see. Now, the share capital of a company can be classified or can be divided into different segments. You have authorized capital or nominal capital. Okay, that is the maximum amount up to which the company can issue shares. Okay, so maximum amount up to which the company can issue shares. This is mentioned in the memorandum. There is a capital clause of the memorandum where you will say the authorized capital of the company is. Then you have issued capital. That is the capital of the company, which is the company issues from time to time. That is, it offers in a prospect, it sends a prospectus and says, we are now issuing so much. Those shares are now being made available to the public for subscription. When the public or when the shareholder, whoever, see, you write a letter to somebody, you can do that in a, private placement also. You just send a letter to your friend, dear Mr. Donkey, you know, my company is doing very well and I'm looking for investors. I'm told that you are a big shot. So if you're interested, I can give you 1% stake in the company. Valuation is so much, so you can take so many shares. In case you're interested, complete the application form and send it to me, and I'll be more than happy to allot these shares to you. So if Donkey sees that, okay, I'm interested, like that, then he will sign. I mean, how he will sign, don't worry, he will have hand and all. He will sign and send you the application form. That is called subscribed capital. That part of the capital, which is for the time being subscribed by the members. Now, from Donkey, Monkey, everybody, you're getting all the applications now. The board of directors will sit, board meeting, they will allot the shares. Once they allot the share, it becomes subscribed capital. It is application has been received, you have allotted, subscribed. Now, if it is partly paid, then to the extent of uncalled capital, it will be uncalled. But once you make a call, it is called called up capital. Once it is fully paid, it becomes paid up capital. The aggregate of money credited as paid, okay, and which has been, shares have been allotted. So when Donkey sends the money along with the application form, we allot the share, it becomes paid up capital. It could be partly paid up or fully paid up. If it is not fully called up, then to that, like Reliance, it will be partly paid up. But if fully paid up, then fully paid up. That is a matter of how much amount has been paid up per share. Okay. So now at this point in time, there is a small problem I am giving you. See, again, some of you may find these practical examples are simple to understand and all. Idea is to reinforce the concept. See, after all, this is abstract and theoretical subject. So I'm trying to make it a little more practical by giving concrete examples. You'll find in the Contract Act. So, sorry, sometimes, I use the word donkey and monkey. Some people are getting angry with these words. Just for fun, I'm telling donkey and monkey. Don't worry. I have nothing against donkey or monkey. And nothing, just for fun. What is that? I don't think donkey means it's a bad animal. It's a good animal, yeah. Monkey is a good animal. What is there? Nothing wrong in saying. Suppose I say lion, tiger, you will not get angry. Only I say donkey, monkey, you are getting angry. Suppose I say Mr. Lion, Mr. Tiger. How lion and tiger are great animals, donkey and monkey are not great animals. You are having the prejudice, not me. Suppose I said lion, tiger. So, see how our mind is getting colored now. Some animals we say are not good. Some animals we think are like that. Are you able to see what I'm saying? It is we who are colored. I am not colored. For me, donkey, monkey, lion, tiger, everything is good animal. Okay? So, absolutely. In fact, once I was talking to my friend and I said, you are a donkey. He got angry. Srikanth, you have to apologize. He said, yes, my apology to the donkey. Sorry. So, I apologize, donkey, because donkey I have insulted by comparing with you like that, I told. Okay. So, I'm sorry, this is just joking. Idea is not to be taken seriously. So, don't be very seriously. Just for fun. Because after all, we've been talking on company law and seriously for so long, for almost 1.5 hours. So, I thought little bit I will relax you. Now, here is the practical example. ABC Limited was registered with the registrar with an authorized capital of 2 crore, where each share is 10 rupees. That means per share 10 rupees, 20 lakh shares of 10 rupees each. 20 lakh shares of 10 rupees each. Okay, sir? That is the authorized capital. In response to the advertisements made by the company to buy shares, that is, they have issued prospectus, applications have been received for 10 lakh shares, as against the 7 lakh shares actually issued. So the company issued only 7 lakh, but applications have been received for 10 lakh shares. The amount called up as of date is 8 per share. The amount called up as of date is 8. As of date, on that 10 rupees, only 8 is called up. All the dues shares have been paid in full, except for 3 shareholders who still owe the final call money of 2 on 6,000 shares. Now, what I want you to tell me, Ritik Prajapati wants to take a break. Us to take a break? Yes, we should. I will now announce the break. I wanted to give this practical example, keep it on the screen so that when we go for the break also, some of you who want to work on it can work on it. Others, take your break, come back, do whatever you want. But after the break, we'll have a break for 10 minutes. Now the time by my watch is something like 7:42, I think, 7:41, 42. So we will have till 7:52, 10 minutes. During the 10 minutes, you can have whatever you want, chai or whatever, and also you can try it out. I want you to tell me what is the authorized capital, what is the issued capital, what is the subscribed capital, what is the paid up capital, called up, paid up. All these. Authorized, issued, subscribed, called up, paid up. For this. I know it's a little easy only. There is an oversubscription where 7 lakh shares have been issued, 10 lakhs have been subscribed. So only 7 lakh can be allotted. You cannot allot for 10. Only 7 can be allotted. Remember. Okay. So let's go for a break. Maybe, okay, chalo. We'll have a break till maximum 7:55. Sir, break, sir. Okay. So great. Now I could see a lot of people putting up answers on the query pad. Excellent. Let us see. So we have. The idea is more to check whether we have understood the concept of authorized capital, issued capital, etc. So let us see. We have a lot of people. Harshita ji has given a number. Adya has given numbers. Great. Bhumika. Okay. Sure, Mr. Darshan, I will continue with fun. But then now let's come to the answer. So here we have, let us see. I think Vaishali Bindal has given one answer. No? That is correct, I think. Authorized capital is simple. 20 lakh shares into 10, 2 crore straight. Issued capital 7 lakh, not 10 lakh. We did not issue 10. We issued only 7. For which applications were received for 10. That is called oversubscription. We'll see that maybe when we come to prospectus or something. It's called oversubscription. Okay. Undersubscription and all. In case of underwriting, etc. Undersubscription. So, oversubscription. 7 lakh. So, we'll allot only 7 lakh. So, subscribed capital is only 7 lakh. But out of that, we have only called up 8 rupees. So, let us see if they have given. Yes, 56. What does Harshita say? 56. Okay. Paid up. 55.88. Beautiful. Okay. So, authorized capital 2 crore, 7 lakh subscribed capital. I think there, subscribed is not, see, that is where the mistake. See, whatever issued only will be applied. They may apply for more. We won't allot. We can allot only for 7. That is the subscribed capital. Okay. If it is fully paid up, then that is the paid up capital also. But here it is not fully. It's called up only for 8 rupees. So, 56. Out of that, 3 fellows have not paid on 6,000 shares. Now that has to be reduced. So, you have only 58,588. Very correctly answered. Adya may want to check her answer. Okay. That's why, since you have taken 10 only, you're getting called up capital and paid up capital is wrong. Just check it out. That is why I want to give this problem so that you'll be cleared. When I have issued 7 lakh shares, I can allot only for 7 lakh shares. I might get application for 10. What I will do now, that balance 3 lakh shares ka application money, that I will adjust against the allotment money, call money and all. But I will not allot 7 lakh, 10 lakh. I will allot only 7 lakh. So subscribed capital is also 7 lakh only. Paid up capital is also 7 lakh, but into 8 rupees. Now, madam is asking one question. Darshan is asking one question. Why do related? See, that's because, see the section numbers I've given here. Do you notice something? Paid up capital is 2 subsection 64. Subscribed capital 86. What does that mean? Alphabetical order. Authorized capital 28. Even coming before share capital itself. 28. Share capital is what? 284. Are you able to understand? This is 286 subscribed. The definition sections are arranged in alphabetical order, not in conceptual order. They are arranged in alphabetical order. Therefore, if I teach in alphabetical order, you will 100% get bored. You see. So what I have done, I have taken the liberty of combining concepts together. So now, in one shot, you know all that. No authorized issues are called up, paid up, over, kadam. So if you want, you keep track. Somebody is keeping track, auditing, great. You calculate the number of, you also check up the syllabus. Some sections are not in the syllabus. I am not covering that. So those subsections which are in the syllabus, 100% I will cover during the course of my lectures. Mainly will be covered today and the next class. But balance also will be covered. So you can check out, completed like that, if you want. But believe me, from the exam point of view, much of it is not important. Because these are all basic foundational subject. But if you do not understand this, later on when you come to important topics like share capital, etc., you will find it difficult to understand. This is foundational knowledge. It has to be given to you. But questions may come on a few topics like small company, like that. But otherwise, you won't find many questions here in this chapter. Okay. So we've seen this. Beautiful. Now we come to kinds of companies. I've collected together all the sections relating to kinds of companies. Holding company, subsidiary company, private company, public company, small company, etc. Everything I bought in one shot. Okay. First, public company. Oh, public limited company. Public company is a residual concept. Meaning, public company means a company which is not a private company now. Right? So you have to ask, what is a private company? Will be defined. Next, we will come to it. So public company means a company which is not a private company and has a minimum paid up share capital as may be prescribed. As of now, no minimum share capital has been prescribed. So two qualities. One, it is not a private company and has a minimum paid up share capital as may be prescribed. Okay, so many sections in the law now, they will be negatively defined, residually defined. That is, they will define one concept and then say, anything which is not this is that. Anything which is not this is that. For example, under section 54G of the Income Tax Act, now for capital gains, when you are shifting an industrial undertaking from an urban area to a non-urban area, they don't say rural area, an area which is not an urban area. They don't say rural area. They say an area which is not an urban area because they define urban area very clearly. It should be part of a municipal corporation or a municipality. Clearly, they define it. Having defined urban area, they say anything which is any place which is not an urban area. So that way, you identify urban areas here. Anything which is not an urban area, if you shift, you will get the benefit like that. Just giving one example. Similarly, public company means a company which is not a private company. That means we should be clear on what is a private company. Once you look at a company and identify, hey, this is a private company, then definitely not a public company. But if you say, hey, this is not a private company, then automatically it becomes a public company. Okay. But look at that. A company which is a subsidiary of company, not being a private company, shall be deemed to be a public company for the purpose of this act, even where such subsidiary company continues to be a private company in its articles. The word deemed is used. Even though in its articles, it has the clauses of, we'll see that, the limitation, restriction, prohibition, etc. Even though it has that, it is still deemed to be a public company because it is a subsidiary of a public company. It is a subsidiary of a public company. Give a simple example. ABC Limited is a public company. PQR Private Limited is the subsidiary of ABC Limited. ABC Limited is a public company. PQR Private Limited is a subsidiary of ABC Limited. PQR Private Limited is deemed to be a public company. The law relating to public company will apply to this company, not the law relating to private company. Okay. So as Prasanna ji rightly says, subsidiary of public company is also assumed or deemed to be, presumed to be. You are using the word considered. Humbly suggesting you remove the word considered and put presumed, because deeming means presumption. It is not a private company, but it is deemed to be a private company. Okay. So like the deeming provision. Like that. Okay. So all sorts of, law is a very, very funny thing. Once you become a teacher of law or student and a knowledgeable person in law, you will use a lot of terminology that only lawyers can use. Deeming is a legal term, deemed to be like that. For example, for a reason, some activities in my house, ceremony and all, they said you should not go out of the house. So define the house. It so happens in the same area in Chennai, I have one building where my father lives and I own another building where I live with my family. I said, for the purpose of these rituals, this number house and that number house shall be deemed to be a single house. I announced, shall be deemed to be. Because though they are separate houses, together they will be deemed to be one single house, wherein I will stay. Because I have to come to this building also, because my office is in the first floor, I have to come like that. So I'm just kidding. So the word deeming is a very convenient word. What that is not, we will say it is. Two separate houses cannot be one house. But I deemed that they are together. Okay, like the deeming. Once you use a deemed word, you are creating a legal fiction. The law is creating a legal fiction. It is not the same, but shall be deemed to be. Private company cannot be a public company. But if it is a subsidiary of a public company, it shall be deemed to be a public company for the purpose of this act. Got it? Good. So A Private Limited is a subsidiary of AB Limited, a public company incorporated under the Companies Act 2000. A Private Limited wants to avail the exemptions available to private companies. Can it do so? No. A Private Limited is a subsidiary which is a public company. Therefore, A will be deemed to be a public company, will not be allowed to avail exemptions. But having said that, once upon a time in the 1956, so many sections are applicable to private company. Earlier, they were not applicable. That way, private companies are coming under a lot of, today, only, some compliance issue. Otherwise, better to be a public company. It doesn't really matter whether you are a private company or a public company. Seriously, because not many benefits. But such benefits as are there, such exemptions as are there, a subsidiary of a public company, which is a private company, cannot avail because it will be deemed to be a public company. Now, we can see definition of private company. Very important. Question could be asked here. I'll talk about it. Private company, in the exam, you might get a question in this area. Private company means a company having a minimum paid up share capital as may be prescribed. As of now, no minimum. Earlier, under the 56 law, for a private company, 1 lakh was the minimum. And for a public company, 5 lakh was the minimum. Now, no minimum. One more thing, you pay 700 rupees, you can have up to 15 lakhs of authorized capital. But the minute you prescribe paid up share capital, the minute memorandums mentioning so much as subscribed, to that extent, money has to be brought into the business. That's why whenever people come to me for incorporation, I tell them, Baba, I will put 15 lakhs authorized capital. But don't agree to bring 15 lakhs. Agree to bring 1 lakh. No problem. No limit is there. No minimum is there. Bring 1 lakh. Bring that 1 lakh into the bank account. Open the bank account. Bring that 1 lakh. We'll file for certificate of commencement of business. Then you do whatever you want. Till then, don't do this. Because some fellows will put 1 crore. They have to bring one. They will say, sir, you didn't tell me. That's why I say, can you bring 1 crore tomorrow? No, sir, I can't. Then whatever amount you can bring in, you put here in the memorandum. Balance you bring in later, we'll allot shares. These are all practical issues. Okay. So private company means a company having a minimum paid up share capital as may be prescribed and which by its articles provides for 3 matters. Very important. What are the 3? 1. A private company shall by its articles 1. Restrict the right to transfer its shares. So there is a restriction on the right to transfer shares. Restriction means any member of a private company should first offer the shares to the existing members. He cannot freely sell it to anybody. Private company ka shareholder or member should first offer the shares to the existing shareholders. If the existing shareholders do not want to buy, he'll give them an offer. If they are willing to buy it, he'll say within 15 days, if I don't, articles will clearly mention. The articles of association, standard articles will clearly mention. So existing shareholders should first offer it to the members. He will send a registered post letter making an offer. If they do not, and he will say, if I don't hear from you within 15 days, I shall presume you are not willing to buy. Then he can go for a sale to any person at a proper valuation. He can sell it. Nobody can question him why he is selling. But before going to somebody, you should first offer it to the existing shareholders. So there is a restriction on the right to transfer. Public company, no such restriction. I can become shareholder, I can sell it to anybody. Nobody can prevent me. Mukesh Ambani cannot say you cannot sell it to anybody. I will sell it to anybody I want in the market. So public company, private company restricts the right to transfer its shares If any, you can say because it is limited by guarantee, no shares. But if shares are there, there is a restriction. 2. Except in the case of one-person company, limit the number of its members to 200. Why except of OPC? OPC by definition has only one person. So it cannot have more than one. Then it is not OPC. Okay. It will be private company. That's all. So except in the case of one-person company, limit the number of its members to 200. So the number of members of a private company cannot exceed 200. Now, joint shareholders shall be treated as a single member. Suppose Mr. and Mrs. A, they want to be always connected with each other. Everything they will do only together. So even holding shares, Mr. A will be the first holder, Mrs. A will be the second holder. They are inseparable couple. But still, for the purpose of this, they have taken a single member, not two members. Single. See, everywhere you have to be careful. Whether joint shareholders will be treated as single member, it is not a universal rule. In this case, they shall be treated as a single member. There are other situations where they will be treated alag-alag. There are other situations where specifically section says joint shareholder shall be treated as single member. So everywhere you have to look out for the treatment. Be careful. Don't assume that always joint shareholders will be treated as single member. There are some situations. Okay, like for example, operation and mismanagement, separate. There are two. Attendance at meetings, 2. When they come, there are 2 members. Like that. So you cannot prevent the joint shareholder from attending because he is also a member. Yeah, he also entitled to attend. You cannot say only the first holder will attend. Both can attend. Like that, there are some. But by and large, many sections will say joint shareholder shall be treated as a single member. Note 2. The above limit, this is very, very important. The above limit of 200 members shall not include employees. Means current employee. Who are members? Employee, members. Today he is an employee and he is a member. Don't include. Former employees who are members of the company while in the employment and have continued to be the members after the employment ceased. Mannar & Company Limited is having 3 employees who are shareholders. They are currently employees and shareholders. For counting 200, remove, don't count. Now, in addition to that, there are 2 more fellows who resigned from the company, then bought shares of the company. They are former employee, but they were not members while in the employment. They acquired the shares subsequent to the employment. Then they will be included. But suppose there are 2 guys who became shareholders, then resigned. They will also be excluded. Former employees who were members of the company while in that employment and have continued to be members after the employment ceased. So this point is very important. So simply you cannot say ex-employee. Merely because if you ex-employee, I won't consider. I will ask him, when did you buy the share? Did you acquire the share when you were an employee? No. Then you are to be included for counting 200. But if you acquired the shares while you are an employee, then you will be excluded. And current employees, shareholders, excluded. Got it? Of course, last 3. Prohibit any invitation to the public to subscribe for any securities of the company. So, a private company cannot make a public offer of shares. I repeat, a private company cannot make a public offer of shares. Therefore, listed company means only public company. So, please understand. Unlisted company can be either public or private in there. You can have an unlisted public company and definitely unlisted private company. So, private company will be unlisted only. So, you need not say unlisted private company. Enough if you say private company. But public company may be either listed or unlisted. But private company, no question of listing. Because if you want to get yourself listed, first thing you have to do, convert yourself into a public company. Only then you can make an invitation to the public, issue a prospectus. Private company prohibited from making an invitation to the public. Got it? So don't ask. Again, many times I find students will ask this question. Sir, can private company get its share listed? Nahi. No. Okay, it cannot be possible. You got it? If you want to become a listed company, pehle you should become a public company. Only then you can become a listed company. Okay. I don't know. Suddenly there is no example of a private company which is listed. No. Okay. Because if it is prohibiting, yeah. I mean, it will be oxymoronic now if it can be listed, because if it's a private company, it will prohibit invitation to public. If it cannot make an invitation to public, how it can get itself listed? So, no, not possible. Okay. So, 3 matters. Here is another practical problem. It's an exam type problem, not asked in the exam. I have set it myself, but still, such type of question could come in the exam. Yeah, there is nothing called privately issued prospectus. Prospectus is a document made to the public. There is nothing called. What you are asking is whether a private company can make private placement. Yes, it can. It can make private placement of shares. We'll talk about it when we come to prospectus. Don't worry. But that is not prospectus. That is called private placement. We'll come when I come there, I will talk about it. So your question should be, can a private company make private placement of shares? It can. But can it issue a prospectus? No. Whether privately or publicly, it cannot issue a prospectus. Okay. If it is issuing a prospectus privately, it is called private placement. Okay. Got it? You can't issue to the public, means you can't make a public announcement or advertisement. Private placement means specifically with the name of the person, you have to write a letter specifically addressed to that person and not more than 250. There is a restriction. We'll come to that later. When I teach that, I will teach you. If former employees buy shares after their employment ceased, it will not be okay. They will be included for the purpose of calculating 200. So it is not okay. But if, are you able to understand? You should not include. Prospectus is a public document. Don't keep asking question on prospectus. I am going to teach you prospectus separately for 3 sessions. Fully we will teach. Don't worry. At that time, I will answer everything about prospectus. But 100% private company cannot issue prospectus. Somehow you put it into your head and save it there. Don't get confused. Private company cannot issue because it is prohibited to make any invitation. Got it? Chalo. Now, Flora Fauna Limited was registered as a public company. There are 230 members in the company as noted below. Okay. Directors and their relatives, employees, ex-employees. See, basically, Flora Fauna is a public limited. It has 230 employees. Of that, directors and their relatives are 50, employees are 15, ex-employees, whose shares were allotted when they were employees. They are 10. 5 couples holding shares jointly in the name of husband and wife. So, totally 10 members. 5 into 2 now. Others, some public, not public, strangers, total unconnected people to whom you have gone. Maybe through private placement or whatever. Now the board of directors wants to convert this company into a private company. They can do so by amending the articles now. So as they will amend the articles to include restriction on right to transfer and prohibition. They should also limit the number of members now, but they are having 230. So can they do so? Whether there is a need for reduction in the number of members? There is no need, because how to count 200? Employee and members who are employees when the shares are allotted can be ignored. That is, employee is 15, ex-employee is 10, so total 25. Okay. That is to be excluded. 15, 10, take it out. 5 couples holding shares, though it will be technically 10, they will be treated as only 5. So, joint shareholding couples will be treated as 5. This will be treated as 5. This is 50. So, 50. These 2 will not be considered. 50 plus 5, 55, 60, 100, 200. Exactly 200. Therefore, there is no need for reduction in the number of members while converting Flora Fauna Limited to private company. I hope you understood that point. Private company. Okay. Any doubt? If you are okay with this, I will proceed to the next point. Company can convert itself into since total number of members, correct. 200. Absolutely correct. 5 into 1, 5. No need for reduction. Total 200. Beautiful. All of you have understood. Now we move on to holding company, subsidiary company. Holding company in relation to one or more other companies means a company of which such companies are subsidiary companies. How they are defining, see, holding company in relation to one or more other company means a company of which such companies are subsidiary companies. That is, if it has subsidiary, it is holding company. That's all. A company which has subsidiary company is a holding company. That is the meaning of this wonderful English. That is the meaning. A company which has subsidiary company is a holding company. That means you will ask immediately, sir, what is subsidiary company, sir? I will tell you. Here again, they are saying company includes body corporate. What do they mean by that? Now go back to your body corporate definition. What did we say? Body corporate includes company incorporated outside India. So, a company incorporated outside India could be a holding company. For the purpose of this section and for the Act, the word holding company, when we use that, it will include body corporate. For this purpose, for this section alone, for this subsection alone, for the purpose of definition of holding company alone, normally body corporate will means when they use the word, of course, body corporate includes Indian and here they say company includes body corporate. Whereas normally company means what? Only Indian company. Normally company means, as per definition, self Indian company, only Indian company. Whereas for the limited purpose of this subsection, only for definition of holding company, company includes body corporate. Meaning a foreign company, a company incorporated outside India can be a holding company. I'm being very, very careful in my words. Only for this subsection. Only for definition of holding company. For that purpose alone, company includes body corporate. That means a company incorporated outside India, the word holding company can include that also. Got it? So here is a holding company with the 3 subsidiaries, just for example. Now I am defining voting right for a specific purpose. Don't think I'm jumping and going. No, because we are going to see voting right a little later. Therefore, I'm defining voting right. For subsidiary, to understand subsidiary definition, you need to know what is voting right. That is why I'm defining voting right here. I am following conceptual model. I am not following the order of subsections. That is why 93 is coming here. Okay. So if some of you are keeping the Institute Ka material in front of you and trying to follow, listen to me, look at the book, listen to me, look at the book, this chapter it may not work. In this chapter it may not work. You will only end up moving here, moving there, getting confused. Don't do that. Aram se shravan karo. Aram se suniye. Just listen to me, look at the slide, take notes, understand. Later on you go and do compare and contrast. Do match the following. So Srikant thought it is there. Hai, Srikant thought, hai, Srikant thought, hai, Srikant. Hey, Srikant did not teach. I will teach. Baad mein. Don't worry about it. Okay. Don't worry. Okay. Now, voting right means it will be taught. Don't worry. When the time is ripe for you to understand, I will teach. Voting right. Sir, can we say holding company is somewhat similar to headquarters or see, if you're using such comparisons very loosely, I don't want to. Yeah, kind of. Yes, kind of. Head office. Yes, corporate office. Yes, holding company. It is the controlling entity. If you're looking at it that way, yes, controlling entity. But it's more than that. Here, when we define subsidiary, you will see that those arrow marks are not just about control and management. They are also about ownership and holding. So the holding company will actually hold 51% of the shares of the subsidiary. Of course, in de facto, in some manner, the holding company will control the subsidiary affairs. So in a way, yes, the word control is involved. To that extent, yes, we can say it is somewhat similar to headquarters or head office, but loosely. While answering questions regarding suppose holding company, can I quote half section like section 2 and not include subsection 46? So you see, section 2 is a very, very big section. So if you're going to say section 2 without selling the subsection in section 2, it may not make a big point. See, if you say as per section 2, chalo, as per section 2, because section 2 is having what? More than 90 to 90 subsections definitions. So unless you are specifically telling which subsection, it may not make sense to quote. But not here, but some other sections are there, like 185. So 185 is having 13 subsections. but you may not quote exact subsection, but you can say according to section 185. There it is okay. But here, if you say according to section 2, chalo, according to section 2, because everybody knows 2 has definitions. Which definition you will have to tell them? See, one more thing. Why are we quoting section numbers? Because, see, I am talking to you. I am saying, look here, this is mentioned clearly in section 125, subsection 6. Why am I telling that? So that you will go and refer to section 125, subsection 6. Remember, the gentleman correcting your paper is definitely a knowledgeable man in company law. He knows which section it is. So why are you writing section number then? To demonstrate to the examiner that you are so knowledgeable in company law that you can quote premium on your answer. If you decide to do that, then interested, see, Baba, I'll tell you what will be the difference. I used to write section numbers because I used to remember them well. How I remembered? Because I enjoyed studying the subject. When you enjoy studying the subject, it's not mucking up. It will come naturally. Are you able to understand? So I used to write, for example, in winding up, I used to write section number with subsection, one answer. In my BCom exam, I wrote one answer for winding up of company. That answer went into 7-8 pages. BCom. In BCom exam, how many pages you write is very important. So almost I took 5 additional sheets and I wrote complete winding up of company. In fact, in that paper, I got 92. In corporate laws, in my BCom exam, I got 92. Because the examiner himself may not have known that so many sections are there and so many issues are there. That was because I had passion on that subject. So automatically section numbers will come. Obviously, your marks will go up. So if you are writing an answer, the answer is correct. As per the section, everything is correct, content is correct, body of this answer is correct. If you are not given section number, what will happen? 5 marks is the allotted marks. You are not given section number, then you will get only 4 or 3.5. But suppose you write section number, then examiner is very impressed. He'll give you 4.5 or 4. So if he thinks you are worth only 3.5, if you write section numbers and impress him, he'll give another half mark. So we are only talking about extra half mark there. For that extra half a mark, how much you are going to do, you decide. If it is not coming naturally, then don't force yourself. You will not fail in company law because you didn't write section number. If you know the subject well and have written the answer correctly in good English with good handwriting, you will get 60% of the marks. Guys like me who are passionate about the subject, when we write the section number, etc., we will get additional half mark. So we are pushing our score from 60 to 70. 60 to 65, 70 like that. Why I am doing that? Because my problem subject is elsewhere. Accountancy is my problem subject. There I am weak. So there I will be struggling to come into that 60 range itself. Somehow I will get 57, 58, 60. 60 law, if I touch no accounting law, taxation law, 60. My weak subjects. So if my strong subject is law, there I have to score. Only then I can get All India rank. I am an All India rank holder, All India 30th rank holder in Inter, All India 27th rank holder in Inter, All India 30th rank holder in final. So for that type of stunt only, you need all these things. Otherwise, if you don't write section number, nothing will happen. Okay, so don't mistake me. 5 fully and all, no way, sir. You can rare. That means what, point for point, your answer should be correct. I mean, your handwriting should be so beautiful and should be like, you should do like this and write. Such cases, maybe they'll give rarely, sir. In CA exam, rarely heard of people giving. It's not, we are not university exam. Come on. We are not high school exam. We are CA institute. We are not so liberal. We cannot be. We will not be. Okay. So please do not accept 5 and all. Please don't go with that exception and be disappointed. See what the experience you had in higher secondary, university exams and all, please do not expect it to happen in intermediate exam. Okay. So just go with a little bit of pragmatism. Maybe in cost accounting, yes, you can get 5 on 5, 10 on 10. If your answer is correct, well presented, steps are clearly shown, you will get 4 marks. Maybe in income tax, maybe exactly as per the computation you have done line by line, it's pakka. Even there, they will not give 5, they'll give 4.5. Sorry to say this. Okay. So, but their chances are there in computational subjects. But in theoretical subjects, do not expect and be disappointed. But 4.5 is good enough, boss. Why do you want to? Okay. Of course, there are some cases where somebody got sentimental, but not in law. I think in accountancy, some people got sentiment, all that. Definitely not me. For me, 64 was a great achievement. But my goal was, in all subjects, I'll get above 60. In all subjects, I'll get above 60. Automatically, what happens? Even if your goal is like that, automatically you will get rank and all that. Instead of 56, 60, 75, the total up you'll get high scores. Automatically go into the rank list. Anyway, I've exceeded my time already too much, but I enjoyed interacting with all of you. I think we will continue holding company, subsidiary company tomorrow. Till then, I mean, the day after tomorrow, 24th, inshallah. So till then, saying goodbye to you and wishing you all a great evening ahead. Bye.